Hello guys, welcome to BHAVANA'S Online Academy. So today we are going to learn the leverages chapter from financial management. Let's start with the chapter. So before we start, this is just going to be a quick revision video. So make sure you are done with your first reading so you're able to revise better. So yes guys, so in financial management, that is your leverage chapter, you are only asked three kinds of question in an exam. One is either to find out operating leverage, or to find out financial leverage, or to find out combined leverage. Okay, so this is the question that you are asked in exam, and this chapter is also important because it has been asked in the past 4 attempts, that is your May 18, November 18, May 19 and November 19. So make sure you don't skip this chapter for your exam. So yes guys, so before we get into the chapter, there is something known as income statement. There is something known as income statement which you will have to know. Okay, so we'll just go through quickly what is income statement. So income statement is your sales minus variable cost, and you get your contribution, and from contribution you have to reduce your fixed cost, and you will get your earnings before interest and taxes. From that you have to reduce your interest amount, and you will get earnings before taxes, and from this you have to reduce your tax so that you will get your earnings after tax. So earnings after tax, in this leverages chapter we presume that there is no preference dividend. So your earnings after tax will also become your earnings to equity shareholders. So from that you have to divide your number of equity shares that you have in the organization, and you will get your earnings per share, So make sure you learn this income statement before you understand the chapter thoroughly. Okay, so yes guys, so first we'll start with operating leverage. So your operating leverage is related to your fixed cost. Your operating leverage is related to your fixed cost, and so what will be your operating leverage formula? Whatever is above fixed cost divided by whatever is below fixed cost. So your operating leverage formula is contribution by EBIT. Since your operating leverage is related to your fixed cost, your formula will be whatever is above fixed cost by whatever is below fixed cost. So your contribution by EBIT. Next, what you have is, you have financial leverage. So your financial leverage is related to interest. So your financial leverage is related to interest. So what will be your financial leverage formula? It will be whatever is above interest and whatever is below interest. So above interest is EBIT, and below your interest is EBT. So this is your financial leverage formula. Next, you have something known as combined leverage. Combined leverage means a combination of both of these. So it's nothing but operating leverage into financial leverage. So these are the three basic formulas that you'll have to know. Also, apart from these, you have another formula for finding operating leverage and financial leverage and combined leverage. So from any method you find out operating leverage, the answer is obviously going to be the same. So yes, what is the second formula for operating leverage? Financial leverage and combined leverage is what we are going to see. Okay. So what is operating leverage? So in your operating leverage, another formula is percentage change in EBIT. Your percentage change in EBIT by percentage change in sales. Another formula is percentage change in EBIT by percentage change in sales. Your financial leverage, another formula is percentage change in EPS by percentage change in EBIT, right? Okay, and the other formula of combined leverage, which you can see here, is percentage change in EPS by percentage change in sales. Okay, these are the three formulas that you will also have to remember for operating leverage, financial leverage and combined leverage. So the first three formulas are the basic formulas by which you solve the sum. Sometimes they might also ask you questions from these three formulas also. So now what we'll do is, we'll try to see each question. We'll try to see one question in each of these so that you are able to understand more. Yes guys, so we are going to see a question from our ICA textbook. It is your illustration number 1, and it is related to your operating leverage. So if you understand what is operating leverage, you will be able to easily work out the sums of financial leverage and also your combined leverage. So what it says here is that there is a company which produces and sells 10,000 shirts. So 10,000 is the capacity. The selling price is 500 rupees. The selling price is 500 rupees and the variable cost is 200 rupees per shirt. And then fixed cost is 25 lakh and the fixed cost is 25 lakh. What they have told you here is that you have to calculate your operating leverage, and also if the sales are up by 10%, what will be the impact on EBIT you have to find out. So here first, whenever you start a whenever you start a sum of leverages, first what you have to do is you have to always prepare your income statement. Whatever leverage they may ask, let it be operating leverage or financial leverage or combined leverage, make sure you first prepare a income statement and then you move on to solving your leverages, because all the data which you will need, you will only get from the income statement. So what was our income statement? It was sales minus variable cost. It will give your contribution, and then from you have to reduce your fixed cost and it will give your EBIT. Our operating leverage is related to fixed cost, so it will be contribution by EBIT. So information until this is enough. If your question is asked for financial leverage or combined leverage, you have to prepare a full-fledged income statement. Okay, for operating leverage, this much is enough, because we will get both our contribution and EBIT within this income statement itself. Okay, first sales. You have to find out the sales amount. So what they say here is that a company produces 10,000 shirts. A company produces 10,000 shirts and sells 10,000 shirts for an amount of 500 rupees. So this is your sales value. 500 per shirt into 10,000 shirts. That is your 50 lakh rupees is your sales. 50 lakh rupees is your sales. Then you have to reduce variable cost from this. What is your variable cost? It is 200 per shirt. Then 10,000 shirts into 200. That is your 20 lakh rupees you have to reduce from your sales. If you reduce 20 lakh rupees from your sales, you'll get your contribution. That is 30 lakh rupees. You'll get your contribution 30 lakh rupees. Then they have told you the fixed cost is 25 lakh rupees. That means you have to reduce 25 lakh from the contribution and you will get your EBIT as 5 lakh rupees. So for operating leverage, what do we need? What's the formula of operating leverage? The numerator will be whatever is above the fixed cost, and the denominator will be whatever is below the fixed cost. So it is contribution by EBIT. So what is your contribution? Your contribution here is 30 lakh rupees. So 30 lakh rupees by 5 lakh rupees. So your operating leverage is 6. So your operating leverage is 6. How do you have to denote this operating leverages by times? So you have to write here 6 times. So this is your operating leverage. Same way you will have to also find out your financial leverage and combined leverage if asked in the question. Yes. So combined leverage will be operating leverage into financial leverage. Okay. Next, what they have told here is if sales are up by 10%, that means if the change in sales is by 10%, then what will be your impact on EBIT? So here we read the formula, that is percentage sales in EBIT by percentage change in sales. What you have to do is they have told you here that in percentage your sales are up by 10%. So what you have to do is operating leverage equal to percentage change in EBIT by percentage change in sales. Okay, so what they have told you is whatever the percentage change in sales is there, they have told you. Okay, what they try to say here is that then what is the impact on EBIT? You have to find out what is the percentage change in EBIT. So you also have the information of operating leverage, that is 6. So you have to multiply these both and you will get your percentage change in EBIT. That is nothing but 6 into 10%, that is your 60%. So that is your 60%. So change in EBIT is 60%. What this is trying to say is that if your sales will increase by 10%, your EBIT will increase by 60%. Your EBIT will increase by 60%. This formula says that if your sales increases by certain percent, your EPS will increase by certain percent. So in this, what they try to say here is that if your EBIT increases by a certain percent, your EPS will increase by a certain percent. So this is the illustration 1, and I hope you would have understood how to apply this and the basic formulas also. So we'll see one more sum. Yes. So for more understanding, I'm also going to solve your illustration number 3. So yes, so in illustration number 3, first we'll see what they have asked us to find. They have asked us to find operating leverage, financial leverage, combined leverage, and also return on investment. And they have asked if the sale increases by 6 lakh, what will be the new EBIT? Okay, so we'll go through the information one by one. So first what they say here is that sales 100 rupees per unit is 24 lakh. Your variable cost is 50% of the sales. Always the variable cost is calculated. If they have given it in percentage, you have to calculate it on sales. Okay, and your fixed cost is 10 lakh rupees. And the company has borrowed 10 lakh rupees at 10% per annum. And equity share capital is 10 lakh rupees, 100 each, and calculate other things. So I've always told you that whenever you get the question of leverage, first bluntly prepare your income statement and then start solving your question. So first you have to start with sales information. So sales, they have told it is for 24 lakh rupees. It is for 24 lakh rupees. Okay. Next they have said your variable cost is 50%. Variable cost is 50%. That means 12 lakh rupees is your variable cost. That is 50% of 24 lakh, that's 12 lakh rupees. If you reduce it, your contribution will also be 12 lakh. Okay, from this you have to reduce your fixed cost. You have given your fixed cost is 10 lakh rupees. So if you reduce your 10 lakh rupees, your earnings before interest and tax will be 2 lakh rupees. From that you have to reduce your interest. So interest there directly they have not given you, but they have told you that you have borrowed 10 lakh rupees and for that your interest is 10% per annum. So interest you can find out from this. That is your 10 lakh rupees is your borrowed amount. In that 10% is your interest. That means 1 lakh rupees is your interest. So if you reduce your interest, your EBT will be 1 lakh. Next you have to reduce your tax. So tax, actually I think the point is missed in the question. It is assumed tax at 50%. Okay. So 50% of 1 lakh means 50,000 rupees tax you have to reduce. And remaining, whatever is earnings is remaining for equity shareholders, it is 50,000 rupees. So now we have to see how much each equity shareholder is earning. Earnings per share, how much it is. So we have to divide by number of shares. So what is number of shares here? They have told equity share capital is 10 lakh rupees of 100 each. So they have not given you shares, rather they have given you in amount. So they tell you that there is 10 lakh rupees of shares and each share is for 100 rupees. That means you have 10,000 shares. That means you have 10,000 shares. If you do 50,000 divide by 10,000, divide by 10,000, you will get 5 rupees as earnings per share. So now that we have found out this, next what they have told us in the question is that we have to find out our operating leverage. So operating leverage is very simple. I already told you that operating leverage is nothing but you have to see your fixed cost, above and below you have to divide. So it is contribution by EBIT. So it is contribution by EBIT. So it is 12 lakh by 2 lakh, that is 6 times. That's your operating leverage. Next what you have is your financial leverage. So what is your financial leverage? I told you financial leverage is related to your interest. So whatever is above that divided by whatever is below that. So that means it is EBIT by EBT. So that is EBIT by EBT. So your EBIT is 2 lakh and your EBT is 1 lakh. That means your financial leverage is 2 times. Next what they have told you is you have to find your combined leverage. Combined leverage is nothing but operating leverage into financial leverage. That is 6 into 2. That is your 12 times. Okay. I hope until this you have understood. In next what they tell you that you have to find out your return on investment. So the formula for return on investment you will understand in the ratios chapter. You will understand that in the ratios chapter. However, I will tell you the formula here. So return on investment, since we only have equity here, we are writing return on equity equal to earnings after tax minus preference dividend by equity shareholders funds. Even if you don't know the formula right now, it's completely okay. Whenever I'm going to upload the ratios chapter, you will be able to learn this formula. For now, just see that this is the formula. Okay, so in leverages chapter, there are two formulas. There are actually 3 formulas which are used frequently. One is this ROI formula, and the next is the total assets formula, and the third formula is of PV ratio. Okay, after we complete this sum, I will tell you the other 2 formulas also. So this is the ROE formula. Okay, so in this what they tell you is that you have to find out your return on investment. So what is your earnings after tax? You have to see what is the earning after tax. It is 50,000 rupees. So earnings after tax is 50,000 rupees. You don't have any preference dividend because you don't have any preference share capital. That means this is 0. Then you have to write your equity shareholders funds. That means how much funds your equity shareholders have put into the company, that we have read in the question that it is, here it is 10 lakh rupees. So by 10 lakh, then you have to do into 100 and you will get your percentage, that is nothing but 5%. So this you don't need to worry, it's okay. The next point is connected to the leverage chapter. If the sales increase by 6 lakh, what will be the new EBIT? So what they say here is, if sales increase by 6 lakh rupees, what will be your EBIT? You have to check where these two factors are there. Is these two factors there in the operating, are these two factors there in the operating leverage formula or financial leverage formula or combined leverage formula? They have asked you sales and EBIT. So increase in sales and increase in EBIT. So this both are found in the operating leverage formula, that is percentage change in EBIT by percentage change in sales. So you have to do this right now. So yes guys, so now what you have to do is you have to write your operating leverage formula here. So operating leverage is equal to percentage change in EBIT by percentage change in sales. So now we have to first see the question. In question it was given that sales has increased by 6 lakh rupees, right? So now the 6 lakh rupees increase, it is given in the form of numbers. You have to convert it in the form of percentage so that we are able to substitute it in the formula. So how will you find the percentage increase? So first, the sales was 24 lakh, now it is going to increase by 6 lakh and now it is going to be 30 lakh rupees. So you have to see how much the increase is. So the increase will be 6 lakh by 24 lakh into 100. That is 25% is the increase. So now that we have found out it in percentage, we have to now substitute it in the formula. So first we saw that operating leverage was 6 times. So 6 equal to percentage change in EBIT by percentage change in sales, that is 25%. So now you do 6 into 25%, your percentage change in EBIT will be 1.5. So 1.5 is nothing but 150%. So if your sales increases by 25%, your EBIT will increase by 150%. Your EBIT will increase by 150%. Okay. So in the question they have not asked you to actually find percentage change in EBIT. Rather they have told you to find something known as new EBIT. So how will you find new EBIT? New EBIT is equal to old EBIT plus the increase. Okay. So what was your old EBIT in the question? 2 lakh rupees. Your old EBIT, it was actually we found out that it was 2 lakh rupees. Okay. So 2 lakh rupees plus 150% of 2 lakh rupees, because 150% is the increase, right? It will be 3 lakh rupees. So your new EBIT is 3 lakh rupees. Okay. So this is how you find out your new EBIT. So this is what we understand, and we have also completed our illustration number 3. So what you can do after this is you can take your for CA Inter. In your November 19, your question number 2 is from leverages. May 19 paper, your question number 2 is from leverages. Likewise, in November 18 also question number 2 is from leverages. And from May 18 alone, in question number 1, section B is from leverages. So all these 4 sums you can work out. Yeah. And your leverages chapter will be covered. You have to work out all your ICAI sums and these 4 sums also. Also, there is one thing that I told you that I'll tell you before I leave. That is your total assets ratio also they can ask. What they'll do is they'll not directly give you the sales. Rather than the question, they'll give you total assets turnover ratio and total assets. So using this formula, you have to find your total sales and substitute it in the income statement. So this is the formula: total assets turnover ratio equal to total sales by total assets into 100. And then PV ratio also they'll give, and they'll give you contribution. You have to find sales from it. So this way also they can tell you to find sales. So PV ratio is PV ratio equal to contribution by sales into 100. This one. Yes. So these are the two formulas that you'll be needing. Also, this PDF will be available on the Telegram group. The link is in the description box below, so do check it out. Also, if you need a video on the past 4-year examination questions of this leverage chapter, make sure you comment down below so that I can make up a new video and upload it soon. Also, if you like this video, please do like, share and subscribe, and make sure you hit the notification icon so you get notified every time I post a new video. Thank you guys.